Well, I think in terms of this number, unfortunately, we're probably going to see another negative year on year. I mean, my own forecast is for -2%, but I think the key point is that it's going to remain weak, at least as far as this figure is concerned. However, it's not all doom and gloom. We have seen a couple of months now of better export numbers, double-digit year-on-year gains in merchandise exports. I would expect that to start translating into some better industrial production numbers in the not-too-distant future. Probably not this month, but I think as the year progresses, the trend will improve, and perhaps actually improve somewhat more than people are anticipating. Well, I think key to the CPI is always going to be food. I mean, it's pretty much 50% of the CPI basket, and of course, it's often a very volatile bit of the CPI basket as well. Now, the monsoon is going to be crucial there. We know that the monsoon has been pretty good. We know that we are likely to see higher agricultural output in time, and that in turn I think will lead to a drop in food price inflation. It's not going to happen immediately, but over the next few months, again, I think we're going to see some better news on the CPI inflation front as well. Luckily, India doesn't import a huge amount of its food products, so the weakness of the rupee shouldn't be a big factor there. I do actually expect economic growth to at least modestly exceed what we saw in the last fiscal year, i.e. to be more than 5%. Now, increasingly, I'm in a minority in that camp. Over recent times, we've seen forecasters slashing their numbers, as you're well aware. And I think actually forecasters have panicked a little bit in some ways, like the market has, and perhaps the two are connected with each other. It seems to me that actually in some ways the fundamentals are better this year than they were last year and are being underappreciated. In particular, the world trade cycle is picking up. We should see the lag benefits of this rupee weakness increasingly come through. Fiscal policy has turned from being highly restrictive in the second half of the last fiscal year to be slightly accommodative for growth. The monsoon is much better. That will lead to higher agricultural output, and that will also have second round benefits to the economies. And even on interest rates, although we've seen money market interest rates rising by 200 or 300 basis points, and that will have some negative impact on growth, our work suggests that as long as the repo rate and commercial banks' lending rates don't rise, and that's certainly still our forecast, then actually the damage should be limited from that increase in money market rates. At the same time, the Indian economy should have lost the lagged effects of all those huge tightening measures through 2010-11. At that time, we had 500 basis points of increases. That should have fed through the system. So, as I say, for all of those reasons, we're looking for slightly better growth in this fiscal year than last fiscal year.